Hi guys, this is Mark from Trading on the Edges, and I get always a bit the question, well, what stock we should pick for trading in options? Well, here's an easy guideline that shows you a little bit how to choose the good stock and after that how to get the right option for it. So in this example, I took the Apple stock because I like it fundamental and technical is a good thing, and so we can really go into it. But first of all, I think the most important is how much capital you are ready to invest. Because you see, if you trade in options, it's obvious that you maybe invest just now a small amount, but at the end, it's obvious that in case it doesn't work very well, you would have to know how much is your exposure in Apple shares. So as an example, I took here now $25,000 that I would be ready to invest if things are not working so fine. When it comes to fundamental evaluation, is always I look at the earnings of the stock and all these recommendation. And when you look about, I think you have many analysts saying about giving a purchase into that stock. Well, you have some selling too. But let's say I was more looking a bit about stock from the beginning of the year till up to now. And you see Apple had the highs of 145. So I said to myself, well, at 130 here, it would be a nice possibility to sell a put option. And again, because one option equals 100 shares, so 130 would be 13,000 US dollar to invest. And then I said to myself, well, in case it would drop even more to 120, well, I would sell another put option, making now another $12,000 to ready to invest in Apple. So I would get a total of 25,000. I think this is, as I said, very important. You should be aware how much you are ready to invest. Well, then I was looking at the historical volatility of the stock. I think this is very important too to analyze. Well, you go into a stock and you should compare the historical volatility, which actually shows you how the stock has performed versus the implied volatility. This is actually what the market is expecting, a kind of future volatility. So I always take about the 10-20 days volatility because my point is that I'm selling options in a short term. I mean, options can be weekly or monthly. So what happens if the stock in Apple is when the stock drops just from 145 to 130, volatility automatically is rising up. So actually the implied volatility can be higher than the historical. And this is what I'm looking for. If that is higher, then I'm ready to sell a put option. Here you can see at 20 days, but this figure is from the 1st of April, so it has come down a little bit. So the historical now currently is higher than the implied. On February 1st, I sold a put option on Apple, strike 130, expiry 21st of February, so it's about 20 days left, which actually I have seen here. Volatility at the moment was quite high because the stock really drops from 145 to 130. So it was interesting to sell a put option, exercise at 130. As I said, I would be ready to buy at 130. So I got about 2.805 or $280 for 100 shares of Apple. So again, my exposure is that I'm ready to take 100 Apples at 130, exposure of 13,000 US dollar. So on February 21st, I'm long stock 130 because actually Apple dropped to 128 on February 22nd. So in other words, I had to take these stocks at 130. So what I did on 22nd of February, I right away sold a call option on Apple, strike 130 at 3.788. So here I took a kind of option which actually has a 30 days expiration, not just one short term. I thought to myself, well, I'm going now into March, so I better keep a bit a longer one, getting a bit more premium. Volatility was around 32. So on March 19, things get worse for Apple, more or less. It went down to 119. So the call option, which actually was the obligation to sell or to deliver the stock at 130, expires worthless. But then I said to myself, well, this is really now a quite heavy drop of Apple. Let's sell again another put with a strike of 120, but this time a kind of short term, just 13 days left, and I would get even still a nice premium of 3.22 US dollar. Volatility at that moment was at 30, so it dropped a little bit too. And obviously this was probably a good way on March 19 to actually sell a put option, because from then on actually Apple tries to put a kind of basic which actually was around this 120. So the summary of those transactions. If you really go into a stock, you should really do the fundamental and technical homework, let's say, in a way that you really need to know what is important, why you would invest into this stock. The other thing is the sentiment of the market as well. I mean, we have seen that the Nasdaq actually dropped quite heavily in that moment. So it's obvious that Apple stock is more based on a technical stock in a way that the thing would drop more. Well, you have to consider that too. Repeating the total investment, so I'm ready to spend $25,000 in Apple. So that was kind of worst case. I was long 200 Apple, one actually at 130 and one at 120. So I get an average of 125. So these are now the transaction I have done. So I sold the put option, then I was long, then I sold the call option. Then actually the call option expires. I sold another put option because the stock dropped more. And let's say on 1st of April, Apple was at 123. So my put option expires worthless. So my position would be now, let's say, still long 100 Apple at 130. So maybe I would wait a little bit till it goes a bit more up, maybe 125, 26, and then I would sell again a call option. So this strategy, I would just continue with weekly options, because I think these weekly options are very interesting. Probably now I would wait a little bit. If the stock drops again for 120, I would sell a put option. And as I said before, if the stock would go up to 125, 26, I would sell a call option. But at the moment, well, I keep a bit aside and follow the market. Well, I'm Mark, trading at the edges with more than 30 years of stock market experience. Now I'm really the specialist in traded options, whatever, in Europe, Eurex, CME, CBOT in America. Mostly I'm really going into fundamental stocks. So I'm keen more on stocks, let's say kind of old economy. Okay, Apple is maybe not this kind of stock, but I would say that Apple has a fundamental value, and this is why actually I can invest in that stock as well. I'm offering this single or group online Zoom coaching. In this kind of 1 hour coaching, I really show you more ideas of trading strategies in options, but I will go into my online broker account as well, showing a little bit how the things are done. I will show you a bit the cost of an online broker, but and I could assist you in your decision to choose an online broker as well. I do these education videos like the case study of Roche shares or why I only sell options. There are more to come. But from my side, I would really appreciate your ideas and your suggestions about maybe ideas you would have that I could put that into a case study. I think it's very important to have this exchange of information, of ideas in trading. Well, guys, that's all for today. I hope you have enjoyed, and I wish you good luck in good trading. Bye-bye so far.